Nearly $35 trillion in U.S. debt. How much of the tax you pay are servicing the government's debt? Coming up today on Business Matters. Good afternoon, and thank you very much for being here with me. I'm your host, Don Ma. Mixed day on Wall Street, it looks like. Some big losers here. We'll get to them in a moment. First, the major indexes. The Dow up 81 points, S&P down 0.5%, and the Nasdaq down 1% today. Ford down a massive 18%. A brutal response this is from investors after the company's earnings report late yesterday. We have more details on that later in the show. Now, let's go to mega cap stocks here. Falling. Meta Platforms down 1.7%. Microsoft down about 2.5%. Alphabet down 3%. Investors here seemingly preferring smaller cap stocks, as has been the trend recently. The Russell Index outperforming today, up almost 2%. Now, on to GDP. U.S. economic growth appears to be solid. The economy expanding at a robust 2.8% annualized rate in the second quarter, according to the latest data by the Commerce Department. The GDP report showed that businesses are continuing to invest and build their inventories, as well consumers still opening up their wallets. Here's Joseph Trevisani, senior analyst at FX Street.
It does look very good. I mean, we're 1.4% in the first quarter, so we've doubled that in the first estimate. It would seem to be a good sign that we've recovered from the slowdown in the first quarter into the second. Will it continue? At the moment, you'd have to say yes.
Now, with that being said, not everything in this report is good news. Now, here's Vance Ginn. He's the president of Ginn Economic Consulting.
But when you dig underneath the hood, you see something quite different that I think better reflects what Americans are facing when you exclude government spending, which is just redistribution of taxpayer dollars across the economy, and you exclude the inventories that are very volatile from quarter to quarter, you get down to only 1.3%.
So the GDP number released today is just the first estimate out of 3. There may be reversions down the line. Other factors to consider is that the labor market is cooling, which could impact wages. Meanwhile, state and local government revenues are also slowing, meaning that the government would have less money to spend. Government spending is part of the GDP. Now, there's also the savings rate.
The savings rate went down to 3.5%, which is near a historic low. So these are considerations that make it feel more like a recession, where more than a majority of Americans feel like we're in a recession now, even though we have these stronger headline numbers.
Disposable income after adjusting for inflation and taxes increased more slowly last quarter. That meant consumers turned to savings and also saved less to fund their spending last quarter, which may not be sustainable in the long term. Okay, moving on. Vice President and Democratic presidential frontrunner Kamala Harris is set to meet Israel's leader soon. Benjamin Netanyahu met with President Biden earlier today, but the meeting was closed to the press. Today, Harris was speaking to the American Federation of Teachers Convention in Houston.
Today, we face a choice between two very different visions for our nation. One focused on the future, and the other focused on the past. And we are fighting for the future.
Netanyahu's last visit to the U.S. was in 2020 when former President Trump was in office. The Israeli leader is planning to meet with Trump in Florida on Friday. The White House meeting comes during a crucial time in the 9-month-old war in Gaza. Biden's looking for Israel to close negotiations on a ceasefire deal that would attempt to release the dozens of Israeli hostages and end the fighting. Now on to sports. NBA rights could be headed to overtime. The National Basketball Association has rejected Warner Brothers Discovery's offer ending a 4-decade-long partnership. The league announcing new rights agreements with Disney, NBC, and Amazon. In a statement, TNT Sports said that it matched Amazon's offer and does not believe the NBA can reject it, adding it plans to take appropriate action. And the league said Warner's proposal did not match Amazon's terms. All right, and joining us now is NTD's sports expert, Dave Martin. Dave, how are you doing today?
Doing well, Don.
Okay, so here's the thing. Has the NBA said that what it was about, TNT's proposal, that didn't match Amazon's offer?
Not specifically, but obviously, I mean, it couldn't have been the numbers, the payments. That's $1.8 billion a year for 11 years. I mean, you couldn't change those and still have a matching offer. Most theorize it has something to do with the streaming options that Amazon Prime has versus TNT Sports. Or really, it's their parent company, Warner Brothers Discovery. Now, they would presumably stream games on Max. Maybe there's something with that isn't a true match. But really, from an outsider's perspective, it sounded like on Monday when Warner Brothers said they'd matched the offer, that was it. They were back in due to that clause in their contract. So you have to wonder what had taken place between now and when their exclusive negotiating window ended in April that made this about face to get back in. I certainly think the NBA would have preferred at that time anyway to continue their partnership with TNT. I mean, not just for continuity's sake, but TNT is that very popular show inside the NBA as well, and that'll be canceled, of course, if this is not, decided in the courts in TNT's favor.
Okay, I have a follow-up on that. So, I mean, had Warner Brothers Discovery given any indication here that they were going to match Amazon's offer leading up to this, or was there any indication at all that Warner had re-engaged the NBA in contract discussions? Yeah,
in the weeks leading up, they had indicated they were planning to match the offer. But by that time, I'm sure the NBA and Amazon really, dotting the I's and crossing the T's on this new agreement. Maybe we're too far down this path to go back. But it should also be noted that Warner Brothers CEO David Zaslav said in 2022 at a conference that they didn't have to have the NBA. I mean, maybe that was just a negotiating posture. I'm really not sure. But obviously, I mean, having live sports, it's a major selling point for TV and streaming subscribers. I mean, the NBA is generally seen as like the second most popular sport, probably just ahead of baseball, but lagging behind the NFL. So you get the feeling that maybe negotiations between them and the NBA and Warner Brothers got a little acrimonious. Their negotiating window ended. The NBA went to Amazon and NBC instead. Warner Brothers probably had second thoughts by that time, but it was too late, so they used this matching provision to try to get back in. And now we're just going to have to wait for the courts to decide it.
All right, Dave. Always great to have you on. Thank you very much.
Thank you, Don.
Okay, moving on from sports to the U.S. national debt, and it is about to hit $35 trillion. That number continues to rise exponentially. To put all this into context, here's NTD's Dylan Morgan.
The U.S. national debt is about to hit $35 trillion, and the gross interest on that debt is now massive. As a comparison, it's 76% of all personal income taxes collected every year. These are the latest numbers from the Fed. Personal income taxes are by far the greatest contributor to the federal government's coffers. And unless something changes soon, the government will have to pay out more in interest payments than it receives in personal income taxes.
So the biggest expenditure in the government is interest on the debt, and that shows the extent to the problem that the debt is right now.
The debt shows no sign of slowing down. It has jumped $27 trillion in the last 20 years and $12 trillion in the last 5 years.
Just 4 months ago, the CBO changed their projection of the deficit from $1.4 trillion this year to $1.9 trillion. And all this money adds on to the debt.
Both Democratic and Republican administrations have added to the debt in recent years. You have to go all the way back to 2001 to find the last balanced budget.
Both parties need to talk about this. They need to put away the political rhetoric, the partisan rhetoric, and talk about how we get the country on a better fiscal path.
Williams says balancing the budget would require spending cuts, but so far on the presidential campaign trail, no candidate has made the debt or deficit a major talking point. Dylan Morgan, NTD News.
A $243 million fine. That is part of the plea deal the Justice Department has finalized with Boeing over its 737 MAX jets. Boeing will plead guilty to defrauding the government and pay the fine. The signal is dropping for Apple in China. iPhone shipments fell in the second quarter, according to research data. In contrast, China's Huawei smartphone shipments surged more than 40% year over year. Meanwhile, China's central bank has surprised markets yet again, cutting interest rates again. This is on top of the other rate cuts earlier this week and is another sign that Beijing is trying to prop up the economy. Elation could be the new emotion now that Disney's Inside Out 2 is the highest grossing animated film ever. The Pixar movie has raked in more than $1.4 billion globally. And coming up, Nestle having a hard time winning back cost-conscious consumers. It posted disappointing sales numbers, and Southwest Airlines is shifting to assigned seating for the first time in its history. That and more in a bit. Don't go away. Thank you for staying with us. Some headlines today. The U.S. economy expanding at a robust 2.8% annualized rate in the second quarter, according to the latest data by the Commerce Department. But Americans seem to be digging into their savings. The U.S. federal debt will hit $35 trillion any day now. The Federal Reserve estimates that the interest payments on the debt is now a massive 76% of the personal income taxes of all Americans combined. The National Basketball Association has rejected Warner Brothers Discovery's offer, ending a 4-decade-long partnership. The league announced new rights agreements with Disney, NBC, and Amazon. Now, just out, Norfolk Southern just reported earnings after the market. Its revenue rose for the first time in 5 quarters. The company says volume for merchandise and intermodal transportation rose. That helped to offset decline in coal business. Weapons and drug demand up, consumer goods demand down. Nestle and Unilever have posted disappointing sales growth for the first half. Both are under pressure from value-seeking behavior. That's how Nestle's CEO described it. The duo did beat first half sales volumes and profit margins, though. Shares for Ford have tumbled to a near 6-month low after it missed second quarter profit estimates. Ford faced stiff EV competition and higher than expected warranty burden for recalls. And drug maker AstraZeneca has raised its full-year sales and profit forecasts. It has seen strong demand for its medications for cancer, rare disease, and heart disease. U.S. defense company Northrop Grumman has also raised its forecast for full-year profit and revenue. The ongoing war in Ukraine has fueled strong demand for U.S. weaponry in Europe. Now, Southwest Airlines shares rising over 5% today after it promises to some major changes to the company. Its profits nosedived 46% in the second quarter. CEO Bob Jordan explains what happened.
Primarily as a result of domestic capacity outpacing demand. The decline was also a result of Southwest-specific challenges as we fully mature. Bottom line, we sold too many seats for the peak summer travel period too early in the booking curve.
In other words, too many flights, not enough passengers, even though many people are flying. And when too many travelers buy tickets too early, that means they all paid the lowest prices. It's good for them, but bad for Southwest's bottom line. So for the first time in 57 years, Southwest makes the biggest shift in its history. CEO Bob Jordan made the announcement today.
We're moving to assigned seating from open seating, and we're going to add premium options, namely extra legroom. About a third of the seats across our fleet will be available in extra legroom. We're deep in product design.
And Southwest has been long associated with being a low-cost carrier. Bags fly free, free flight changes, affordability, introducing premium seats for wealthier travelers is a dramatic shift. And Southwest has long been associated with open seating as well. Travelers choose where to sit after getting on board instead of getting a seat assigned beforehand. So CEO Bob Jordan says he's adapting to the changing times.
Customers' preferences shift over time. You know, customers are just taking fewer short-haul trips today. They're flying longer, and when they fly longer, the importance of an assigned seat goes up.
He says 80% of travelers want assigned seating, according to Southwest's own research, and that the number one reason people don't fly Southwest is that they're avoiding the open seating system. Jordan brought up the hypothetical case of a traveling family.
As a family, especially if you're on a long-haul flight, and the uncertainty in today's world, you know, the uncertainty of are we going to be able to sit together is a huge question.
This comes after activist investor Elliott Management called for change. It poured nearly $2 billion into Southwest and put out an open letter criticizing CEO Bob Jordan for poor execution and being stubbornly unwilling to evolve the company's strategy. Elliott says that Southwest's rigid commitment to an approach developed decades ago has inhibited its ability to compete in the modern airline industry. And the letter further criticizes Jordan as being not up to the task and says he's presided over a period of severe underperformance. Jordan responded during the earnings call.
So far, they've not shown any willingness to engage in any meaningful conversations with us. Most of that has been, public personal attacks on leadership and the board. So like any shareholder, we would love to engage and hear their feedback.
Now, to discuss this situation, we have here live aviation analyst Jay Ratliff. Jay, good to see you. How are you doing today?
Doing great. As always, good to be here.
Okay, just give us your initial reactions on the earnings.
As far as the earnings, Southwest is at least moving in the right direction. They came off of a quarter where they lost quite a bit of money, which is unusual for Southwest Airlines. Southwest, the history of that great company is they make money when other airlines do not. So when they kind of see the rest of the pack leaving them behind, it's a feeling that Southwest simply isn't accustomed to. So much, in fact, that it's driven them now to the point where they're going to respond, what they're saying, to customer concerns, shifting from open seating to assigned seating. Look, the bottom line, it's going to allow them to generate a lot more revenue. And that's really the underwriting factor here, is that they need to do this. And look, I'm thrilled. Southwest is a great company. They've got an incredible history. They're the airline a lot of people around the world would like to be. But right now, the experience, the fun of flying Southwest Airlines is no longer there. You have passengers that are showing up with families that are trying to board airplanes, and you have people blocking seats, blocking rows. You're finding it difficult for your family to sit together. Of course, Southwest's flawed policy of the way they're boarding is sadly generated because you have passengers who realize, look, if I'm in a wheelchair, I board before anybody else, as does everyone in my party. It's nothing to see a Southwest Airlines flight depart with 40 wheelchairs ready to go before anybody else boards the airplane. And for a lot of the frequent flyers at Southwest, they're saying enough is enough. So by going to assigned seats, what we're finding is the need for people that maybe 40 wheelchairs got on, but only 6 got off because nobody really needed them on the other end. It's going to allow a lot smoother process. And I think it's going to allow the boarding process and the experience of Southwest Airlines to improve. The idea of rolling out premium seats is going to be a big, big hit, because when Delta Airlines and United and American started doing Economy Plus by giving just a bit of more legroom, they were selling so many of those that some of those airlines took out first class seats to make room for more. So Southwest is headed in the right direction. I like what I'm seeing.
All right, so what we got today, from your vantage point, how much does it have to do with Elliott Management, the changes that is? Because in its open letter, they called for dramatic change and the company's leadership as well. So what are your thoughts?
Well, I think that it would really be silly on our part to feel like that did not have an impact. I certainly think it did, because when you've got an individual that comes forth and says, this is how much money that I'm going to be shoving in this direction, demanding some changes. Look, shareholders, board of directors, you have a lot of people that are going to be listening to that, and at least to consider what some of those options are being laid out. And I like it, because if it can force Southwest into some changes, I think it's going to be a good thing. And I think after assigned seats, one of the other things that you're probably going to see is this bags fly free, which is really just the 2 first bags. Any additional bags you have to pay for in Southwest. But we might see that policy change as well. Southwest is leaving hundreds of millions of dollars in profits off the table by not charging for checked bags. Now, all they have to do, like every other airline has done, is say, well, rising fuel costs has forced us to do it.
We really don't want to, but we have to. Of course, that's a bunch of bull. We know why they're doing it, to raise more money. But I actually think after the assigned seats get going, and now they're also bringing back red-eye flights, I think the next thing we can see from Southwest Airlines is a real discussion on should we continue this bags fly free policy.
All right, we have about 60 seconds here. Just make it extremely clear for us. Why did the profit see a nosedive for Southwest?
Southwest was counting on a lot more airplanes this summer. They booked a lot of flights. They were ready to go. Their guidance was looking very good. And then Boeing came out, couldn't give them all the airplanes that they thought they were going to have. Southwest, since last fall, was making reservations for this summer. And now they've got to stop and go to the expense of refunding that, spending the time required to get everything back. And based on the fact that they thought they were going to have a lot more revenue this summer, what we're finding is that it really caught them off guard. And remember, all the Southwest flies is Boeing aircraft. They have no Airbus, no other type of airplane. So they're taking a beating on this latest Boeing issue, and they're very anxious to get the aircraft, those silver revenue tubes, from Boeing as quickly as they can, so they can take advantage of this incredible demand for travel that we're seeing right now.
All right, Ray, always great to hear your insight. Thanks for coming on.
My pleasure.
Okay, moving on now. The two astronauts who pilot Boeing's Starliner test flight will remain in space a little longer. Sonny Williams and Butch Wilmore arrived at the International Space Station on June 6th. For what was expected to be a week-long mission, but their return has been on an indefinite hold because of issues with their aircraft's thrusters. After weeks of troubleshooting and tests, NASA and Boeing officials still haven't narrowed down a return date.
We don't have a major announcement today relative to a return date. We're making great progress, but we're just not quite ready to do that.
As of Thursday, the astronauts have been in space for 50 days. NASA has previously indicated that the Starliner can stay in space for a maximum of 90 days. All right, and that is all the stories we have for you today on Business Matters. Thank you very much for watching. If you have any feedback for the episode, please let me know. You can email us at business@ntd.com or just leave a comment online. I do read them. And don't forget, business matters. We'll see you tomorrow.